Good ECB day, Warriors. How's everyone doing? Ingmar, how are you? And I think we have Michael Weissman's here this morning and Bran. We're going into the breach. Hello, Alexander. Hello, team.
Morning,
Morning,
How's
Dale.
everyone doing? How you guys doing? So let's take a look.
Hey, Dale.
Hi, Steve. How are you?
Good. How have you been?
Great, actually.
Nice. Good to hear.
Yeah. So we're going to blow through 111 here on the ECB. Let's start with Ryan.
Yeah, we're just talking about that. We're close enough. Whether it's just a run to take the barrier out, which has been pretty solid, or whether it's due to some news from the ECB remains to be seen. We're close enough that we could knock it through on the announcement and then do a quick stop run and then drop back waiting for the guard. But overall, much like the Fed yesterday, where I saw no real reason why the dollar would gain or yields would gain, I don't see any real reason why the euro would go down today. Okay. So if it does dip and there's nothing too dovish from the ECB, I think we go through it after the conference.
Okay, because we're on the verge of retesting. Well, not quite. Still looks like new lows. Nothing that's happened this week has changed it against 102. So I'd be happy to see it finish off in the next several days. And I'm thinking it might finish off down here. 99.30.
Yesterday, Dale, didn't you? It's either going to go one way or another. It's either 102 or lower.
Yeah, 102. You can't be short the dollars the way it looks to me. What a wild night in gold. That spike they had, I don't know if it happened because of the drone strike on Moscow, but I mean, look at that spike that it had. It was
alleged,
and that was it. Yeah, that's a hell of a wick. And while gold made a new high, so far silver hasn't. And then I think we have to address it. The S&Ps sure didn't act good. Before the Fed, they failed at 1.5. And, earlier in the week, we were saying that these lows were critical. So we're going to see about risk and good call on the yen, under 135 yet now. I can't be long yen anymore. And we'll see. I was thinking about it for a nice yen break and yields maybe trading down towards, some of the levels that people have, like down around 310 or so under these lows. Could be, and bonds maybe breaking out this time. It could be about risk off. So we'll know tonight, just like Microsoft saved the market last week. We'll see if Apple could save the market today. Put in a pretty negative day yesterday, starting to show cracks. Steve thinks it's a good company. So
what do you mean? It is a good company. There's no question about that.
Anyway,
I don't think anybody questions if Apple is a good company.
I've been using that on Twitter. I go, even the bears say Apple is a good company.
Why are you calling me a bear? I've been bullish the stock market for quite some time now.
No, I don't know. I would say if you ask 10 people, if you're kind of a bear on the economy and eventually in the market, longer term. You're not a long-term stock bull. Are you a long-term stock bull?
Everybody should be a long-term stock bull, right?
Yeah. Well,
because the trend
maybe
of the stock market, right?
20 years ago, maybe.
So the problem, Dale, is that when you're looking at any index and you're talking about long term, you have to take into account the elephant in the room, which is inflation, and that indexes are in nominal prices, right?
Right. Yeah.
So
That's why it's an inflation hedge.
in a way, yes. So long term, everybody should be a stock bull. Now the question is, what kind of swings we get in between?
Maybe my next lifetime.
You've already lived 4 of them. You want the 5th one now?
No, not really, actually. So anyway, you will see what happens.
But since you mentioned Apple is testing key resistance area. Has been testing for the last 3-4 days a very key resistance area. There's a long-term descending channel on Apple stock.
I'm showing
yeah,
maybe
if you take
maybe I could adjust my,
to take into account that little wick. Yes, exactly. So and if you draw the parallel now to this,
yeah, you mean underneath it?
Yes, on the underside, you'll see there is a long-term descending channel that dates from like the very beginning of 2022 when
That's actually one of my targets, 120.
Yeah. So technically speaking, since you're mentioning of Apple,
that's interesting.
This is a do or die zone, and coincidentally or not, we're testing it on earnings. Right. So
yeah, I wonder why it's lower. It was lower in the aftermarket, and it almost acted like earnings were out. It was like $2.50 lower. Anyway, we'll find out.
Might be some people, wanting to take some risk off the table ahead of earnings, right? Because don't forget that Apple is one of the most owned stocks out there, right?
Right, it is.
Hey guys, we're just a few minutes outside of the ECB.
Okay.
When you wrap up with the Apple conversation, let's take a look at some of the euro pairs.
Yeah, go ahead. Why don't you grab it, Blake? Because
go ahead, Blake.
I'm still waiting for this 112 area, and still short Dixie. So we'll see.
Yeah, well, as far as the dollar goes, you're looking for the dollar index to drop towards the lows, right? There's a good chance that we could take out the lows today, since the dollar index is so euro weighted.
Yeah.
The failure in the dollar index just a couple of days ago is my biggest concern. And you've got, not only do you have the euro that's getting close to 111, you've also got the dollar index that's failed as well. So those are the two biggest components of the dollar index. So yeah, I don't think it's too, it's crazy thinking that the dollar index will hit lows. And then you also got the sterling that's up against resistance. So if you see the euro, here we are around the 111 level. Ryan came in, you guys were talking about in the chat room, just buying the euro above 111 on a stop run. Are you guys still thinking that?
Timing.
What's that?
Timing. It's the issue is that we have ECB decision in 6 minutes, and it seems like some players would like to push it towards that 11 right for the ECB decision, perhaps to get the barrier out of the way. So timing is going to be more important than what happens in the next 7-8 minutes or so. But yeah, I reckon if it breaks with the current mood towards the dollar in the market, we may have that 111.75, 112 the figure run. The market is still quite positive towards the euro in general. If you look at most of the euro crosses, I'd say. So it's a real possibility. If they come out dovish though, then it's probably back into the 109s and trade ranges until whenever.
Okay, man, couldn't you see it? And Ryan, I know you guys probably talked about this on the flow show. Couldn't you just see it working out this way? It's like you're getting close to that 111 barrier, going into the statement, which is just in about 4 minutes.
Yeah.
It breaks above that, stops out everybody who's short. And then, Christine Lagarde comes in live during her press conference and just squashes everything.
Yeah,
I mean,
it's extremely possible. It's an ideal situation of being at such an important level. But remains to be seen what they do, because I still do not rule completely out of 50 BPs, and that euro goes on a rampage before we start to think again.
So you think they might surprise with 50?
There is a possibility, Steve. I don't rule it out. I really don't rule it out.
I don't disagree with you. I mean, between not hiking, which I think is really out of the question, right, and hiking 50, unquestionably, if they are to surprise in one direction, that is definitely going to be in hiking 50, right?
I wouldn't discount it completely. That's just it's one of those meetings where the data have not been bad enough for them not to take the 50 into account, if you see what I mean. It's my base case is 25, but I really would not rule out the 50 just in.
So just in case we get, let's say we get a full, like 50 basis points and 0.5%, just so you guys all can see it. This is a long-term chart, so you can see.
I think that's going to be undeniably bullish.
This is just this is a 618 retracement of this. What is that? A year and a half, I mean, it's the last 2 years worth of a move. That's going to come up around 112 and change. It coincides with the 161% extension, just right up there around 112. Then also, I don't want you guys to forget, this is a weekly trend line from December of 2016. It comes in right around the same, right around where we're at. So you're gonna see a lot of resistance come into play if we get some sort of gapping higher of price, which, as you guys are have been explaining, it's totally possible. A couple other currencies I think that we should be taking a look at. If you look at the euro sterling,
just quickly, Blake, I think you've also got to take into consideration, if they go something like a 50, you've got to perhaps think that they're going to say that it's a 50 and then a pause, and then
it's a one and done, right?
Bullish. Yeah, does that look so bullish going a 50 rather than a 25, and we're going to do more?
Ryan, excuse me to interject, but I think there's a very low likelihood of that, because why do 50, which is going to catch the market off guard, and pause, and not just do 25 and 25? So personally, I believe that if they do 50, now it's a big if, right? But since we're talking that probability, if they do 50, I don't think that it's going to be accompanied with something, why wait a little bit? We did 50, now we're pausing. I doubt it. I think that if we see 50, it's not going to be accompanied by some kind of a statement. We just wanted to get it over with, and now we're pausing.
We're going up 50 basis points on our way to 8%. That's what they're going to say.
No, that can't happen either.
I'm joking. Hey, listen, we got just a couple of minutes. I just want to give everybody a quick view of the euro sterling, which is kind of in the apex of the triangle. I mean, you can see how we've been, this is a big resistance up here, by the way. If you guys don't know why it is, it's a 618 retracement of this move. And it really has, I'm sorry, not at that move. It's the next one down. Shoot, I can't grab it now. This one right here. It's just kind of stalled the rally, big resistance. So just know that going into it. Euro Aussie, still nice bullish channel. Euro Kiwi, still bullish channel. Euro Canadian up near its highs thanks to crude oil. So the euro still looks very constructive. Euro Mexican peso holding up very well for the peso. So the euro just looks really good pretty much across the board, but we're up against resistance. So let's go ahead and let me grab the data flash. We got how much time do we have?
15 seconds.
Damn it. What I didn't mean to move that. Okay, here we go. Here's the euro 15-minute chart. ECB rate decision coming up. And good morning, Stelios.
And
TikTok.
25, 25.
25.
Yeah.
All right.
No surprise there.
No, we're gonna have to wait for the presser. You guys let me know if you see anything in the statement that is coming out as well. So see if there's
Future decisions will ensure that policy rates will be brought to levels sufficiently restrictive to achieve a timely return to inflation, blah, blah, blah. So
That's the
continue
thing.
to be based on
Define,
its assessment of inflation. And the
Yeah,
outlook.
it couldn't be more vague than that.
yeah, define
It's-
timely.
Yeah, so it's
She's
how
probably
to say
ready.
nothing by saying something.
ECB
she'll
ready to
probably
adjust
play-
all instruments to ensure 2% price goal met.
she'll probably
Yeah,
read,
when?
Powell's
Which decade? Is my son
Buy it.
going to be in university or still in school?
Chris Weston brought up a great point last night on the trade-off about the TLTROs. What is that acronym?
Yeah, TLTRO.
So it gets so confused. There's so many of them that's upcoming in June this next month that we'll have to pay attention to. So it's that's another lever that's going to be pulled and twisted around. The monetary policy is going to have to deal with anyway. So the euro is coming under a little bit of pressure following the meeting. Stelios, what's your takeaway from this, any, if any?
Well, none yet. The question is on the presser, and for the majority of the time that Lagarde has been chair, every time she had the opportunity, she has been on the dovish side. But past couple of meetings, let's say, I think this is slowly changing. So it's not a given. It used to be a given. Lagarde speaks, the euro gets smacked. But now it's a little bit different. So we have nothing at the moment. I don't see any headlines, anything in the statement. So anything to make a note of. But let's wait for the presser. I don't know. Let's see what kind of bag she's wearing, she's holding, or what color her skin is.
Color bag
right.
she's wearing. Fin
Yeah,
bag.
yeah, I mean, you got to see the color of her skin. I mean, that tells pretty much the tale. I mean, if she's spending a lot of time in the tanning booth, then she's going to be hawkish. I mean,
She's relaxed, right? So she's
yeah. I mean, she's going to be hawkish. She's going to be like
that shows the quality of monetary policy nowadays.
Hey, it's gone from the briefcase indicator of Alan Greenspan to the tan.
I'll have the color chart out shortly.
Good. Yeah, Ryan, you make sure you post that because you're always good at posting that one. Hey, look, let's reverse a little bit. Let's discuss monetary policy from the Fed.
The euro selling off a bit, by the way.
Yeah, the euro is coming under a little bit of pressure here. So
all of that can change with the.
You guys see where we are in euro dollar? Exactly where we were ahead of the FOMC yesterday. So I advise Lagarde to just replay Powell's press conference of yesterday and leave us alone.
There you go. Hey, so let's get everybody's thoughts on the Fed. And I'll start. I'll start by saying this. The Fed seems like they're going to pause. They just got off a rampage of just running rates up, 5% and how long? It's kind of like they just took a sprint. They're going to stop for a breather, and they're going to see how things go. So, and I think it's as expected. And I think that what really probably freaked the market out yesterday was the two comments, and I put this in the chat room last night or at some point yesterday, that rate cuts are not in their playbook. That doesn't mean it can't be in their playbook, but it's just not in their playbook. And they are really going to focus on financial conditions. And they said they will be factoring that in. So that means that stocks are an issue. Commodities are an issue. Financial conditions in general are an issue. And if they loosen, the Fed's going to take notice. So that's putting stock market bulls on notice as far as I'm concerned. So those are my takeaways from the Fed. Let's start with we'll start with the European crew. Ryan, what are your thoughts about the Fed yesterday, and what are your takeaways there?
Yeah, it's a pause without explicitly saying it was a pause. You know, he walked both sides of the street yesterday. You know, something a bit hawkish, he countered it. Something a bit dovish, he countered it. You know, tried to paint a very middle of the road picture. Said, you know, we're at restrictive. Then 5 minutes later, said we may have some way to go till we're at restrictive. So he really waffled through that. But the market is going to market. It's red pause, and now we're going to play the game of pricing or trying to price and predict when rate cuts are coming, and that's already been predicted for the next meeting. If you look at the probabilities, we're already pricing a cut. But the main,
although Powell tried to, you know,
talk away from it, yeah,
dismiss it as
yeah,
a possibility.
yeah, and the market is circling around September as a potential time for a cut. So you look at the short-term yields, and the higher for longer still not being believed in those. So he's got a job on his hands.
The market really believes that the Fed is going to buckle, you know, and I mean, why wouldn't it? It's the
when haven't they?
Yeah, I mean, it's been the MO of monetary policy literally for the last, you know, 20 years, pretty much. I mean, the market panics, Fed comes in and saves the day. It's a very Pavlovian response that the market is giving. That's like, oh, well, hey, we have a banking crisis. Oh, you know, hey, the Fed's going to come to the rescue. So the market's automatically pricing that in. What happens to the market when they realize that this is not, you know, maybe the bank, you know, banking sector and what's happening in the regional banks is just an unintended consequence of what it has to happen. You know, but anyway, we could go off on a tangent. I could go off on a tangent on that, and I'm not going to. K-Man, what are your thoughts about the Fed yesterday?
Yeah, as I said, I mean, it's likely to signal a pause if they want, and he was very careful to walk the fine line and everything besides again yesterday. It doesn't inspire me to say that we're going to pivot anytime soon, but it could be that we are in for a pause. I'm actually not taking a lot away from it, to be honest, apart from the famous word data dependence. And again, I just want to repeat, we've had FOMC and ECB. Of course, we still have to get Lagarde, but we are bang on the same euro-dollar level as pre-FOMC, and that is something that we have to note. So I'm going back to U.S. regional bank watching, probably. Yeah.
Yeah, there were definitely a lot of banks under pressure yesterday. I was looking at a list of them. Just shoot, I don't know where I posted it in the chat room. There's a bunch of banks that were down over 10% yesterday. So really, big moves. Stelios, what are your thoughts following the FOMC? Any opinions there?
I think this is a pause now. The only two reasons why I think the Fed would do something else would be, one, if inflation starts rising, which I don't think it will, especially not with oil collapsing, and B, which I think what the market is pricing a risk of is a crisis of, banking crisis becoming bigger and contagion, etc. I think that's what the market's pricing. Otherwise, why would the Fed cut rates with inflation at 6%, 5%, 4%, even 2%? Why would they cut rates? They wouldn't. So I find it very difficult to see how they're going to be cutting, especially, as soon as September, which is what the market's pricing. But again, I think what the market's telling us is that, there is a risk of big contagion in banks and things really collapsing. Then in that case, of course, they will cut, but not due to inflation or, even if inflation goes to 2%, as I said, it's, they're not going to be cutting then, I don't think. So a pause for now. Sorry?
The market is in essence telling us that they believe that something is about to break shortly, right?
Yeah.
More than the situation with the banks, which so far they've managed to, let's say, patch the leaks there. Although, in my opinion, the problems are very, very real. Self-inflicted wounds, of course, of previous monetary policy. But the market seems to believe that the situation is going to get worse.
So what do you think, Steve? Your takeaways following the Fed?
Oh, for me, there is no question of if they're going to cut. It's when, and it's all about timing that. And it's a very hard call to make, because you wake up one day and you find out that another bank is about to fail, for example, or you wake up on another day and we might find the real trouble in FDIC or whatever else. And you know how that is. Once the market then focuses on something like that and starts pushing on a specific issue, then things can start unraveling very, very fast. And if we know one thing very well from the Fed and the rest of the central banks, is the following. They're going to gradually hike, but if we are in trouble, if they feel that they are in trouble, they can cut rates in 0 time, right? We can literally go from 5% rates to 0% rates in a matter of a couple of months.
So here we are looking at interest rates over time, since, let's see, I was born about here. K-Man was born over. Wait, we lost the rest of the chart. I'm just kidding. Joking. K-Man, it was a joke. Dale is over. I can't even find Dale.
Hey. I see my year on there. So
Dale is two screens away.
I had to go. Yeah, let me go grab the other screen. That's right. No, I'm just seeing if everybody's awake, trying to get a good laugh out of you. Come on, it's tradertainment, man. If you're not laughing, then you're not having a good time. Then hey, it's no fun.
Iceman does not laugh.
Anyway, no jokes aside, though.
In Japan, they honored their elders' wisdom.
Thank you very much, Dale.
Yeah,
we're not in Japan.
All right, senseis. Let's but
those youngsters, they don't realize that we invented economic research.
That's right. But looking at the markets here, we're not. I mean, over time, is this it? Is this the level that we really start cutting? Steve, you sound pretty sure that the Fed, they're going to cut. Doesn't matter. It's a matter of if. It's not a matter of if. It's when.
Yeah, and in the grand scheme of things, Blake, even if they end up hiking another 25, in the grand scheme of things, that chart is going to look like that, right? So I think we are at terminal rate for now, or roughly there. Plus minus 25 basis points makes really no difference, right? And let's not forget the elephant in the room. Supposedly, along with rate hikes, they were doing quantitative tightening. I remind you, the previous time they did quantitative tightening, they managed to get the balance sheet from 4.5 trillion to something like 3.75. And then the balance sheet exploded to almost reaching, we came an inch away, 9 trillion. Now, they started supposedly again doing quantitative tightening. And within 1 week of trouble, half of the quantitative tightening that happened within 5 months was erased within a single week. So stealthily, one part of monetary policy, which is the balance sheet of the Fed, has reverted from quantitative tightening to quantitative easing. So that's already more than halfway of reversing monetary policy.
Yeah. All right. Great conversation. We got about 2 minutes before. We have important data. You think that it's all just the ECB today, which, by the way, we do have the press conference that we'll be covering that inside the chat rooms and on the Morning Edge and all that other stuff, which is for ForexAnalytix traders. Oh, wait, Ryan, you did it.
I did it.
There it is. All right. In case you guys want to know, indicator. Looks like
it. De l'orange. That's good.
All right. I think everybody has a good idea of how we read Christine Lagarde today. We also have, just so you guys know, we have weekly unemployment claims, which you got to watch that going into tomorrow, especially now. Remember, we will be covering the non-farm payroll tomorrow, so make sure you guys are here. We're going to be covering it live with you all. It's free. It's on this same show, same bat time, same bat channel. Look, I watched the original Batman, guys. I know that the old one, how it all goes. So we're going to be watching this data. So let's go ahead and get into the weekly jobless claims. And how much time do I have? Oh,
Just
there it
now
is.
coming
Now,
out.
You have no
All
time.
right. No time.
Non-farm productivity is weaker. Jobless
242 barely.
claims in line.
Yeah, it's pretty much in line. Trade balance numbers a little weak. All right, that's not going to be the mover. The mover today is going to be the mover today is definitely going to be the ECB press conference. So I want to wish everybody good luck today. Dale, sorry I didn't give you a chance to give your opinion about the Fed, but you know what happens? The whole team starts going off, and then we start talking about whatever. So
Yeah, no problem.
all right. Hey, everybody. Thank you, team. Remember, check out ForexAnalytix. It's $1 for 10 days. Jump in our chat rooms, jump into our community, see what it's like. Also check out the trader funding program when you get a chance, because if you take the trader funding program and you can make up to 90% of the returns of your returns and take none of the risk, check it out. And then you can be inside the ForexAnalytix chat room at the same time while you're going through your assessment, so on and so forth. So check it out. All right, Dale, it's all yours.
All right, guys. Thank you, team. See you for the NFP tomorrow.
Thanks, Dale. Have a nice
Traded
interview.
live here with the crew. And Jim Carroll, welcome back to F.A.C.E. Jim Carroll at VIXologist.
Good morning, Coach.
Okay,
how
that
are
was
you, buddy?
funny. That I had to laugh for that one. That was good.
Anyway, every guy's favorite doctor. Anyway, buddy, what do you see setting up here in VIX? To me, it looks like I don't know the plumbing like you do, but
Oh man,
technically a close over 20 would look pretty good.
yeah. So the plumbing has only gotten more complicated, and to be
With-
honest, I don't think with zero
One day.
DTE and CBO
Yeah.
coming out with a VIX 1 day, I don't think
Yeah.
anybody really knows what's going on. But I guess in the land of the blind, the one-eyed man is king, right, Coach?
Yeah. So, so what are you telling people about the VIX and hedges? So, I don't understand this 1 day option trading either.
So
But
can
the
I share
one-
my screen?
Yeah, sure. Try it now.
Okay. Let's see if there we go. Can you see it?
Coming up. Okay, got it.
Got me?
Yep.
Okay, so let's move along. Oh, hang on. There we go. So let's just start out with a little overview year to date, what's been happening in volatility land, using the SIBO term structure, which some people like, some people don't like. I like it because these are all constant maturity measures of implied volatility. And I haven't stuck 1 day on here yet because the historical data set isn't quite yet complete. But if you look at the middle line, the blue year to date, doesn't look really terribly interesting. VIX has stayed below that magic 20 line. We got a little excited in the middle of March. And then, last month we saw the lows,
Taken out.
the futures term structure has generally been in contango, right? Which is a tailwind for a short vol trade. And as nervous as everybody has been, what's been working so far this year is just that. It has been short volatility.
Yeah. Except for
and
that spike, Jim.
yeah, you had the spike right around the the first whiff of the Silicon Valley Bank signature bank problem, the regional bank problem, which remains an overhang on this market, as you guys were talking about.
It was hard to get paid in VIX calls, because I remember last time you were on, I said I bought those June 25s. And
if you blinked
I got out that day. You know why? They weren't even paying intrinsic value.
Yeah.
You know, we're trading at 31, and the best offer was like at 475. They weren't even putting that 1.25 intrinsic with all that time.
Yeah.
Left on the option. What kind of card game is this anyway, man?
Well, let's go around the
Talk
table.
about a stacked deck. I mean, you're
Let's go around
right,
the
and
table.
they won't pay you.
Let's go around the table. You got Slim, you got Tex, you got Shady.
Yeah.
It's a tough card game. You know, it's been a repeat of last year so far, where you just didn't get paid to be long VIX or long volatility. You know, and notwithstanding all the stuff that's going on, you know, we remain in that mode, and it's driving people crazy. The one, you know, if we wander off to, you know, what is this 0 DTE thing? What's this 1-day VIX thing? The one thing that I've been keeping an eye on. So, you know, the futures term structure really hasn't flirted with serious backwardation so far this year, but you know, if you look at VIX 9-day, right, which has been around for quite a while, going back to 2011, and how often has that 9-day implied volatility been higher than the 30-day implied volatility, right? How often have people been more nervous about the 9-day outlook than they have been about the 30-day outlook? And you know, so far this year, and I'm comparing year to date for 2023 against full years, you know, in priors, you know, we're already up close to 50% of the days with VIX 9-day higher than VIX itself. And there, I think, are two messages in there. One, there is a lot of activity in the shorter tenor options complex, 0 DTE being part of that, but obviously VIX 9-day does not take 0 DTE into the calculation. But, you know, folks out there, whether they are on the long side or the short side of the volatility trade, have pulled in their tenors, you know, the whole 0 DTE. And for people who haven't, who want to read more and haven't seen this piece, my buddy Chris Sidial and his gang at Ambrose Capital have put out what I think is a really good piece of research. Let me see if I can put a link in the chat while we're talking about this.
Thanks for doing that, Jim. Because I think I think a lot of the trading public is confused, like we are, about the implications of it. There you go.
So I just put a link in the chat for people who want to check out that piece of research. I thought it was very good. You know, and you know, the speculation has been people want to believe that this is, you know, the Reddit crowd, the Wall Street bets, you know, retail speculation. What Chris's research suggests is that there are a couple of things going on. One, you know, if you think, you know, CPI, the jobs data, the Fed meeting, whatever you think might upset the market and you want to hedge that, you know, it used to be that you had to go out and use monthly options, right? Because, and then they came up with weeklies. That's better. I can close the gap between the event and my exposure. Well, you know, now you can pick the day and express your opinion as a hedge or as a speculation. And so the volume in short dated options has exploded. Gee, it shouldn't be a surprise. The other thing that's been going on is, you know, the implied on the shorter dated options has tended to be higher. You know, witness VIX 9-day trading higher than VIX. And so people are looking at that and saying, gee, you know, I've been selling vol on a monthly basis and collecting the premium. that's been pretty good to me. Why don't I do that now instead of on a monthly basis, on a weekly basis? Well, oh, hey, I can now do that every day. And so there is clearly, and you know, is it hedge funds? Is it, you know, CalPERS? Is it sophisticated investors? Whoever it is, there clearly is a short vol trade in the daily expirations. And obviously somebody's got to be the buyer. The buyers in that case are typically going to be the market makers, the dealers. So it's really, you know, we've created a whole new ecosystem of very short dated volatility. The other thing that I think people need to keep in mind, because it clearly has taken some volume away from the S&P options that are incorporated into the VIX calculation. And let's separate the spot VIX from things like VIX calls that settle to the futures, you know, not to spot VIX.
Right.
You know, there's an argument to suggest that VIX has become a little bit suppressed simply because people have pulled in their hedging activity to shorter tenors, and that could very well be true. You know, if you look at volume across expirations, there seems to be a shift, and that may have some impact on spot VIX right now. So, you know, we're in a brave new world. The thing is, if the you know what hits the fan in a real way, which it hasn't yet this year, notwithstanding, you know, what happened in early March, a 0 DTE option as a hedge isn't going to help you if there's a real blow up. You're going to have to go out
every day. How can they, you know,
you can't
have to reposition. You can't do it, huh?
You've got to go out further. You got to go out a week or a month, or
so it's not about the VIX. It's about they're just really in this trading range that we've had in the market. Just are not the elements of volatility. It's a kind of a sideways, dull market, big intraday swings, but when you look at a longer term chart, it's just a big range, and people are writing collars on it, trying to keep it in there, in that box. So I guess we need an event to take it out of, take out 4,800, 3,800 might do it.
Yeah, to the extent that we get a real event, we get people scrambling for longer dated hedges, you could see the VIX and the VIX futures really jump. Is it going to happen? I don't have the foggiest idea.
Yeah, it will, Jim.
You know, I watch it every day. You know,
it's happening now, Jim.
We're kind of in a little narrow range of activity, waiting for something to happen.
Coming out the other side of the hurricane, Jim.
Yeah, you know, so who knows? We'll see. Anyway, let me hit a couple more slides.
All right.
Oops.
So when you start, you have to do this, Jim. You have to promise me when you get tired of covering the VIX that you'll let me know.
Well, I'm going to be around for quite a while, Dale.
All right. Okay. So I'll still be a writer then. Okay. If a guy like you, who's so passionate about an instrument, ever walks away, that's the most contrarian trade ever. All right.
I promise to let you know.
All right.
You know, so here's just a sort of an update of the review I did at the end of the year. You know, so where has 30-day implied volatility traded this year? It's in a narrow range. You know, it hasn't hit 30 yet, and the average year to date, you know, is below the average of, you know, it's sort of tied with 2021. So again, you know, even the regional bank scare and the debt ceiling debate, which we'll come to, you know, haven't knocked this thing out of a pretty tight range yet this year. And you know, interestingly enough, same thing for VIX futures. And I look at VIX futures I take a constant maturity of 30 days, right, to sort of line up with the VIX. You know, and the challenge with looking at the VIX futures is they do roll every day. And so you know, the only way it makes sense to me to look at it is to create a constant maturity based on the front 2 months. And again, that has traded in a narrow range. You know, we're waiting for something to happen and nothing has happened yet.
Okay.
You know, realized volatility. One of the reasons that the VIX and the VIX futures haven't gone anyplace is basically the S&P hasn't gone anyplace.
Right.
You know, realized volatility, I'm looking at 21 days, 21 trading days. So sort of the equivalent of the 30-day calendar VIX. You know, low levels, certainly less activity than last year. Once again, you know, we haven't really seen a breakout in realized vol. And if we don't get a breakout in realized vol, you know, you're not really going to see a breakout in implied volatility. You know, people just aren't scared yet. And maybe they won't get scared. I don't know. Maybe all this stuff is going to sort itself out and we'll just muddle along. Could be. Let me the debt ceiling thing could get interesting. Let's look at the last two historical examples. The one I remember best is 2011.
Yes.
People may or may not remember that, you know, the Republicans took control of the House that year and told Obama, you know, the only way you're getting a debt ceiling deal is if you cut the deficit. Does that sound familiar?
Yeah.
We also had a little Euro sovereign crisis unfold over the summer. But, you know, the debt ceiling actually ended up being increased on July 31st. But at the same time, the rating agencies downgraded the US. The Euro sovereign thing was still an overhang. And the market just crashed. You know, I remember vividly the first week of August 2011, because we left for a vacation in Europe, and I put all of my client portfolios into 100% fixed income.
You know, this is a very confirming chart to something I read, where this analyst says the problem for the market is not during the process or even, you know, going past the dates. The problem for the markets is when they raise the debt ceiling, because then the Treasury can come in and start offering notes and bonds, and that sucks the liquidity that's finding homes elsewhere out of you know, stocks.
Well,
And it's a crowding out effect.
Yeah.
And that tightens monetary conditions when the debt ceiling is raised, not during the crisis phase of it. And that's what you see right there. After they raised it, the market puked.
The market did puke. You know, it was a combination of stuff.
Really interesting.
But you know, it coincided with the resolution of the debt ceiling crisis in 2011. And the simple, you know, and as you point out, kind of a puke of equities. Treasuries actually rallied hard during that period.
Okay, because of the decline in risk.
Absolutely. Absolutely.
What was it, 20%?
Say again?
About 20% decline?
Yeah. I mean, you know, I just did a quick scan there, and it you know, it came up with 18%, you know, from, you know, but it was very close to 20, you know, from the July top to the multiple bottoms.
Yeah. Okay.
Yeah. People don't remember.
Slide.
Yeah, people don't remember that we also had a replay in 2013. And you know, once again in May of 2013, the debt ceiling was reinstated, but there was no increase, and the market puked. You went through this extended negotiation period that saw, 2 retracements, and then a spending bill was finally passed in February of 2014, but the ceiling was not raised. And when the market got wind of that, there was another puke. So do we get one big puke? Do we get several little pukes? I don't know, but I think people need to be cognizant of the history that says, and to your point before, just resolving the debt ceiling problem does not mean clear sailing.
Yeah. And that's what most will think.
That's what,
And
a
that's
lot
not
of people,
what the charts say.
that's not what the charts suggest. And again, we could see a replay where, the rating agencies come in and say, well, this is all fine and good that you guys have agreed to raise the debt ceiling. But we don't
Another
like
downgrade.
we don't like the combination of increasing the debt ceiling and what you're proposing to do on the fiscal side. And therefore, we think, the credit of the United States has been compromised in some fashion. I don't know that that's going to happen. But again, I think people need to have their trading hats on for the rest of the year rather than, sit back and relax.
Yeah. So you have to be tactical now.
That's certainly my opinion. I think you've got to have a tactical element to whatever you're doing. You need to be paying attention. This is not 2017. We're in waters that may get choppy pretty quickly.
These last 2 slides, Jim, they're diamonds, and really appreciate the work that you do. And it's exactly what people are not thinking. And that's why it's important to present evidence like this, so that's why I say keep an open mind. It'll keep your account open. Right?
I like that. I might borrow that.
You could have it. I'm in a generous mood today. So
and I'll send you the slides.
All right, really great presentation. You have anything else that you want?
I don't have any more. I don't have any more pictures.
Okay.
I think we've kind of summarized my view, which is that there are, and we've still got a hot war in the Ukraine, for God's sake. We've got all kinds of stuff going on. The market tends to try to look past a lot of this stuff, and I understand that. But
I mean, you have pods bubbling on every part of the range.
Right.
There's a pot here, pot there, pot there.
Yeah, we've still got a new guy in Japan sorting out what he's going to do. That could bubble up anytime it wants to.
Right.
No shortage of bricks in the wall of worry, and markets like to climb walls of worry, but every once in a while they got to either take a breather or the bricks come loose and things come tumbling down.
Yeah, well, I think we'll know in the next month or so if the old saying that in a bull market anything that could go wrong doesn't, and in a bear market anything that could go wrong does. So I think we're going to know, and what kind of market we have for the rest of the year pretty soon.
I wouldn't be surprised.
Jim, really thank you, my trading warrior brother, for enlightening us with a little history lesson of what people would not have expected, but now they're going to be aware of it. And who knows how much money and heartache you saved by bringing those slides in today.
Well, it's always a pleasure to be with you, Coach, and you and your colleagues do great work. I appreciate it very much.
All right. Well, Jim Carroll, everyone, follow him at Vixologist on Twitter. Anywhere else you want people to read your work, or
that's the best place to keep track of what I'm up to. I tend to post there with some frequency. And, you know, DMs are open for people who want to get in touch. As long as, you know, people are friendly and
Yeah, no one. I don't want to hear about anyone being mean to Jim. All right.
Coach, I did find out that I had an imposter on Twitter.
Oh, those guys.
Who changed the O in Vixologist to a 0 and was retweeting my stuff and had collected 18,000 followers.
Yeah, I'm always amazed. Yeah, when the pretenders are, you know, doing better than you with your stuff.
Right. Right.
I'll tell you what a bizarro world, huh, Jim? Yeah, no, VIX. Oh, forget the S, Bruno, and you got it. All right, thanks, Jim. Have a great spring, and we'll get back together in the summer. And I bet the picture's different. So
wouldn't be surprised.
What I do. I make bets. So
you got it.
Thank you, Jim.
All right, Coach.
All right, Jim Carroll, everybody. Could join the team in 18 minutes. They're thanking you, Jim. Everyone enjoyed it. And for the Morning Edge. And I'll be here live tomorrow for the NFP. The whole team will be here. So you be here because the NFP means no frickin' problem. All right. See you, Jim. See you, everybody. Adios. Don't just count your pips.